Hello, everyone. Welcome back to the RationalInvestor.com's weekend fun show, our broiler chicken show. Actually, somebody in the level one class was like, well, now, why on earth do you call this the broiler chicken show? Yeah, that's not a bad idea. Thanks, Kevin. And I'm sort of flying solo, so if I forget to do stuff, I I'm reminded by our in Hangout audience here. So thank you, Kevin, for reminding me to post on the site. Did I put the Hangout link in there? Yeah, I did. Okay. So yeah, both the Hangout link and the YouTube link are in there. And if you are on the site and you want to participate in the Hangout, of course, level oneers, I highly encourage you to basically just simply transition from the level one class over to here. And if you have any further questions or anything along those lines about today's topic, feel free to ask again. In fact, I think we did have a bunch of further questions. So we had pretty tough concept to wrap our head around today. The level oneers are dealing with volume impetus and OBV studies and understanding money flow. So a little bit difficult. So I can completely understand if we have to take a few minutes and review some ideas that the students had. I thought it was fascinating, even while I was sort of sitting there, just listening to Graham, such a great instructor. I just had out of the corner of my eye the lounge open at TRI, and people are just posting ideas. And and this is the great part about TRI. I mean, you just never know when these ideas are going to come in. But somebody just posted this idea. Kevin, you. Great idea. And the cool part about this is like a few of our setups all wrapped up into one. Obviously, getting a pretty big volume push here. Somebody's on the buy side hard here. But hopefully, I don't know, Colleen, can you see? And I love to pick on Colleen, but Colleen, can you see the W's that are all sort of trying to form here? So, just based on W type price action, this is definitely of interest to me. And now you guys, of course, have just done the volume impetus study. So when we look at that volume impetus, can you guys see the bulls waking up here? Ah, look at me, I'm a bull. Ah. And actually, this might also, it really all depends on how today finishes. But we might also be getting like really big sort of DAVO signals. And Dav's out there interacting with the world and building out his Pandora's wallet application. So congrats, Dav, on just kicking butt. And I noticed that your students are really coming along. It's fascinating to watch as the students sort of go through the very normal sort of evolutionary process of the course. Probably the first month we do eating our vegetables, and I really wanted the new students to just put away the charts, put away your wallet, right? Put your wallet back on your hip pocket or back in your purse, and just try to understand the idea of building a trading plan. And so there was a lot of anxiety around that. When are we going to get to trading? When are we going to get to the candy store and all that? But slowly but surely, I see, and Grim, of course, as I said just a moment ago, fantastic instructor. I slowly see them, step by step, making that the progress of learning the process. And it's really great to see them. They're I think in week 8 of week 12, so you can really see them coming along. And it's a we're learning a profession here. So, this isn't the kind of thing where you're going to learn how to be a professional trader in like, a week. Usually it takes time, right? It takes time to slow yourself down, get all your ducks lined up, right? Vet out your trading plan, understand what it is you actually want to get out of this and where you want to go with all this. Now they're sort of fully immersed into the candy store and the concepts of things like divergences, price structure, the importance of being very disciplined to wait for trade location. They're starting to gel in them now, and I can see that. It's really, really great to see their evolutionary process. A big part of this broiler chicken show is just simply to address any questions that the level oneers had coming out of class today. So I have seen them post a few questions here. So I thought I'd just take some time and illustrate. Actually, and you guys today in the level one did OBV. So why don't we even? We can do both price and volume divergences here, but you guys are going to be doing price divergence, in earnest over the next couple of weeks. But we did OBV divergence, and I think somebody up here, Dennis, asked, Brian, could you talk about divergence a bit? I don't exactly understand where the divergence has to be. Right on the price structure, is it okay when the divergence is before the price structure? It's a cute little example. No guarantees from the management. We have no way of knowing whether these trade ideas are going to work. Remember, people, that as professional traders, we're really statisticians. And I see there's like 30 some odd people over on YouTube watching. I'm going to be dropping little nuggets like constantly. And that's a little nugget that you should just write down. As professional traders, our job is not to call the direction of the market. I know that sounds weird. And I know a lot of people, they need that sort of self-validation. Look, I said this was going to happen and that happened. And look how smart I am. Oh, look at me. Subscribe to my newsletter, blah, 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 blah. Buy my laundry detergent. We were just joking about that in the classroom. Really what we are is we're statisticians. We're trying to figure out, if these things happen, what is there a statistical probability that will happen? All right. And if you listen to the university professors, they say, no, market's completely what they call random walk. You can't predict price action. So as a result, if that was the case, then this would be just a big waste of all of our times. But what I've learned over my past 20, 30 years working in the business is that when certain things happen, and ideally we want, at least 3 unrelated sort of things that happen. Specifically, I want you guys to learn location, price divergence, and then price structure to frame your trade. Is there a better than 50% chance that will happen, or what we hope happens? And, in the case of speculating in the market, price moves in our direction enough to justify taking the risk. So, if we're statisticians, then really what we have to do is just put away our ego and just, take the trades. And as the trades come in, take the trades, take the setups, and live with the results. Not quite sure how I got off on that tangent, but anyway, speaking to Dennis's question here. Dennis, can you see how this on balance volume indicator made a bottom here? And yet, if we draw a line off of the lows in price there, do you notice how we actually broke those lows and went lower here? But if we actually look at the OBV indicator itself, on that event of breaking to new lows, the indicator itself did not go to new lows. Now, this happens to be OBV. And are you here, Dennis? So you asked this question, so I'm going to specifically talk to you. So in essence, this is a situation where, yes, price was making lower lows, but the on-balance volume indicator was nowhere near making lower lows. And so, we would call this basically divergence. And the easy way to sort of write this on your charts is just to simply take, give yourself a little bit of space. But just simply take something like a ray tool and draw, and actually maybe take the magnet off. Draw a line sort of showing lower lows. Then draw another line showing higher lows. And there, my friend, you have divergence. When we introduced you to something like the RSI study and the introduction to technical analysis, really all I wanted you to do was see M's and W's in the RSI indicator. And as I said earlier, for the next 2 weeks, we're actually going to be going into great detail using the MACD histogram and using the Williams percentage R indicator to try and give us those very strong price momentum signals, and give you a tool to help you see price divergence. But this actually is a very good example of volume divergence. And as I had said in today's this week's lecture to you guys, volume divergences are extremely powerful signals. I mean, they are the poop. In fact, I remember I had one student. I think he's now like basically a landed gentry, and I always make joke with him. But hey, this guy had the balls to throw on like a 20x leverage long trade on Bitcoin at like $400 or $500 a Bitcoin, and ride that same trade all the way up to like 10, 20 grand. So, I mean, hats off to you, Jonathan. That's how traders get rich in this world. I don't even know if Jonathan even watches these videos anymore. So, but the long and short of it here is he was so enamored with OBV divergences. He was like, why would I even bother using price divergences? These OBV divs they're the poop. They're it. They're just incredible. So anyway, the point of the matter here is just so happens that Kevin, who's one of our OGs. Kevin, have you finished the level 3? Are you in level 3 right now? I can't remember. But definitely one of TRI's OGs, he was just posting in the lounge this morning, hey guys, check this out. And this is the kind of market that I think we're in right now. If anything, I think this is, they used to, in the stock market, you could just go and buy the stock market, right? Buy the S&P 500, buy the Dow, and the market just goes up, right? I think, when it comes to the stock market, and we probably won't talk too much about stock market today, but when it comes to the stock market, I think we're in, a very wide trading range, and just buying and holding the S&P 500. Yeah, you're going to be up, you're going to be down. I mean, you've seen what the price action's been over the past 6 months in the stock market. It's all over the place. And yet there's some fantastic individual ideas. And actually, I was tweeting it out. When we get to the Twitter feed later on, I'll show you one idea that I'm very interested in right now in the stock market. And so they often call those kind of markets where individual stocks might vastly outperform the broader market because the indexes are sort of stuck in a massive trading range. They often call those a stock pickers market. And I believe that we're into a coin pickers market. I don't know, I've been talking, and, you guys have probably heard me say this out the yin yang. But I'll say it once more just for posterity. I do believe that we're in sort of the chop Vegas part of the cycle for Bitcoin. This was the chop Vegas part of the cycle for Bitcoin through 2014 correction, 2015 basing. And you notice, right, little fake W's, then slammed to new lows, then another sort of fake, bigger W, smaller W's, then slam those stops. And then finally, after about, 8 or 9 months of this chop, just, the bears getting slammed, then the bulls getting slammed, etc., back and forth. I really think that this is the kind of market that Bitcoin is in right now. And what's really cool is that, when I was out in Europe, I had said, we've got the Litecoin halving event coming up here next spring. We're having our big TRI mothership meetup this summer in Vancouver. That's where I live. And use Litecoin's rally into its halving event to pay for your trip. And indeed, Litecoin is performing really nicely here. And that's pretty much what should happen. And the irony of it all is that, as Bitcoin was trying to find its bottom last cycle, Litecoin had its halving event rally, which was sort of one of the leading sort of indicators that, okay, maybe crypto has found a bottom and is basing, was that Litecoin went from like, I don't know, I think it was like $1.50 a coin. I'm sure we could show you the chart, all the way up to like $8, $9. And into that event, actually just slightly ahead of that event, there was like a guy over in China running a Ponzi scheme on Litecoin, ramping the price up ridiculously. So I think it's funny how they say, history doesn't repeat itself, but it often rhymes. I think we're in a very similar type environment. Have we found the absolute low on Bitcoin yet? I don't know. And frankly, nobody will know for certain until we start actually painting weekly W's and we know that the base is in. If we look at the current price action, hopefully you see that sort of same sort of chop Vegas. The bear's all excited and then they get run out. The bull's getting all excited and then they get slammed. And then we had a cute little setup here about a month or so ago. Worked nicely right up against the top end of the range. People that bought the top end of the range getting slammed. I think on balance, the daily chart, and we have a number of contributors through the week that do analysis and stuff, and come up with their basic prognostications. I think the general consensus around the site is that Bitcoin's still sort of pointing up on the dailies. But having said that, could we easily, poop the bed here? And you notice we're at two important confluence lines here. Could we come right back down and trade back down to value low here and maybe test these lows? Sure. Yeah, that wouldn't surprise me at all. So, I think we're in this kind of market for Bitcoin. Chop Vegas, get all the, the public all rah bull and then slam them hard. Get the bears all rah bear and then slam them hard. If anything, this is healthy. This is what really should happen at the end of a long bear grind that's broken a lot of people's hearts. But, let's call a spade a spade. We've got a pretty well-defined, I'll just use this chart. I'm sure I have it drawn up somewhere else. We have a pretty well-defined uptrend line here on Bitcoin. We can, I would call this a potential trend line. We really need to see a nice close above this sort of 4,300 for it to become like a valid active trend line. But in essence, there is that trend line. And if we start to actually get price action that comes down and we start losing this trend line and accepting below it, then, I hate to say it, guys, I mean, we might be in for another leg lower here. So just be cognizant of that. I mean, this is Chop Vegas. And we really won't know that the bottom is in until we start seeing some really well-defined like weekly W's coming in. And usually what should happen is the weekly W comes in and then we get a check of the breakout, and the check of the breakout sees a lot of buying interest and we make new highs, and then okay, at least we're now starting to trend back higher. I've just free-handed this on this chart. I think this is way too early. It's probably going to be drawn out through into the end of the year. And if I know the irony of it all is I'm hearing, people talking about SEC approvals of ETFs and stuff being pushed out until October. Well, maybe that's when, because the catalyst that actually started off that last 14-15 bull right here was a U.S. Marshal offices auctioning off of seized Bitcoins from the Silk Road auction. The first one was right in this window, I think. No, I beg your pardon. The first auction was up here. Tim Draper won that auction. And then the second auction was here. But notice what I talked about just a minute ago was, they put the W in, they break it out, and then it comes back and it checks the breakout right there and then says, nope, I'm more than happy to be a bull, and away we go. So this is kind of the event that you need to see to actually officially mark that, okay, Bitcoin has turned the corner, and it's all, trending higher from here. And that, I hate to say it, guys, like, I've drawn on here, we are somewhere in here. I kind of feel like, maybe we are somewhere in sort of this neighborhood. It should be a fun summer. And, this was sort of the Litecoin happening event. Like I said, Litecoin went like, 7 or 8 or 9x into that event. Bitcoin caught a bid. The whole market, the whole space was doing, feeling a little bit better. Shortly after that event, bam, they slammed this W's lows just to piss everybody off. And then they put in a tight little W to mark the turning point. So, for all those people that are like, okay, is Bitcoin a bull? Is Bitcoin a bear? Sadly, we still have to say Bitcoin's a bear. But I think that, and I've said this sort of repeatedly over the past couple months, years, whatever, years, I don't think years, but definitely the past months. I definitely think we're closer to the bottom than we are the top. And of course, the public has generally lost interest in Bitcoin. And I've also talked to you about this before. I often see coins, and I think we had a couple Litecoins. We had a couple altcoins just recently do this. I often see that the market will come down. It'll lose that 78.6. It'll swim around, maybe even tag 88.6. We used to have one site member who used to absolutely love placing his bids off of 88.6s. Then the market will eventually sort of clean itself up and then break out through that 78.6, or what I like to call the line in the sand. Eyeballing it, this isn't such a terrible forecast. But until this event happens way over here, we're still in a bear. And you just got to cool your jets, right? If you are a Bitcoin bull, there's no reason why you can't be nanny nibbling and just, once a month, maybe once every couple months, go and pick up a little bit more Bitcoin. And if you actually put yourself on one of those kind of plans, then ironically enough, what you're actually doing is you're rooting for lower prices, because then that means this lot of Bitcoins that I'm buying this month is going to be a little cheaper than the buy that I did last month or a month or two ago. And that, they call that dollar cost averaging sort of in the stock market. If ultimately you believe in this asset, you believe in the Bitcoin story, you believe in the fundamental story, you have a lack of faith in the fiat story, then that's the easiest way to participate in this. And just try like the Dickens when you see markets acting like this, just to cool your jets and wait for reload zones. And then you can start your accumulation strategy. And actually, we'll talk about it in a little bit. And actually, I'm getting way off topic here. I'm supposed to be answering your questions, so I apologize. Shut up, Brian. Get back on topic. Okay, so specifically, and who was that? That was Dennis. Dennis, can you see this OBV divergence here? Does this make sense? Now, if you want to, and really we might even argue that the OBV div is confirming now as we speak. If you wanted to, at this point, just simply say, okay, show me a nice W, and I'll go and buy this asset, perfectly fine. But the point here is volume is in divergence with price here. Really good, simple example. And, full disclosure, in fact, I tweeted this out, but we'll talk about it later on because of the tweet. But, talking about coin pickers markets, somebody, and I already gave his name out, but somebody posted in the lounge this idea this morning, and guess where Brian threw his bid in? Literally, I was like, wow, Kevin, that's a great idea. And I'm a big fan of buying 78.6s. Remember, I just talked about that sort of 78.6 ultimately down the road often, turns out to be the pivot in markets. And also, I'm a really big fan of price gaps as trade location. And you could argue that, there's probably some trapped bears in here. This thing opened up and people sold, and they would love nothing more than to be able to go and buy those positions back. You might also argue, too, there's some trapped bears in these tails as well. So any kind of dip into here, will give me my fill. And we can officially write bid working. And, like I'm the type of guy, I don't even really care. If you want to join me, I'm not going to recommend this idea to anybody. I'm just not. It's your money. You do what as you please. I will tell you where I'm working bids and where I'll place my orders. If you want to join me, you're more than welcome. It's a free market. But, caveat emptor, is there any guarantees that this trade's going to work? No. But I like that. And I love it in the face of this divergence in OBV. Holy crap. That's beautiful. So anyway, so Dennis sort of as a follow-up says, would this divergence be invalid because the price already moved? All right, let's see what Dennis has here. Okay, so you're not, why did you exclude this tail here? I would have drawn off of this tail and that low are basically the lowest lows. So I wouldn't necessarily say there's a divergence here. Try not to, like, if anything, what I see here is you're sort of picking and choosing your points, but this is the lowest low. So I don't really have a problem with drawing it off of this lowest low here. You're also looking at a price chart too. That's a weekly price chart. So what did that daily action look like down there? So I wouldn't necessarily call this a divergence, Dennis. Try and take all of the price action. I would draw my line from that low to that low, and then off of my OBV, that low to that low, and we would just simply say they're in convergence. Well, I don't think convergence is the best word, to be honest with you. I don't really like that. I would just say they're moving in lockstep, in unison. So I wouldn't necessarily call this a divergence. Do you understand that, Dennis? I do most of my those stink bids as Nanny Nibbles own. You could trade that as a trade setup. The only problem I find with trading trade setups off of illiquid altcoins is that if somebody finds out that I'm trading a leverage trade or a sizable trade on one of these shalt coins, I've often actually seen, especially if I post on things like YouTube and Twitter and stuff, I've actually seen guys actually go after my stops specifically. So especially if I'm talking about altcoins and illiquid little shalt coin kind of ideas, probably just going to be working Nanny Nibbles where I'm just buying levels. And there's no reason why you can't work trade setups, but I'm certainly not going to mention trade setup levels specifically on YouTube and stuff, because I often see that, especially with regard to like illiquid names, I used to see it happen all the time in like VSE stocks and, bulletin board stocks down in the States because they're very thin, right? But if the divergence is in the past, how far in the past can it be until it's invalid? Technically, in my mind, the divergence is still valid until we actually start to see market structure in the indicator start to paint the other direction. So let's assume that this tail wasn't here, and let's say the low was right there, right? So you could draw this as a divergence, and that would be correct. And this will just continue to be a valid divergence until you actually start seeing, number one, volume impetus. The bulls just dry up and go to sleep. The bears start to wake up, which causes the indicator to start to roll over. And you start seeing things like M's in the indicator, right? All right, so he's got another example. Let's see what we got here. All right, so this is MACD. So this is price divergence, not volume divergence. But in essence, you're heading in a good direction. And you know what I like to call this, which you'll learn next week when we do this. You can also see the divergence in the relative strength index, but I actually like to call this like double divergence. And of course, I get into trouble with the ladies because I say I love double D's. But I'm talking about divergences. I don't know what you're talking about. So, Brian being cheeky. But yeah, I mean, basically you're in divergence until this indicator actually starts emming out. So the question I would have here is, let's maybe maximize, try and increase the size of this MACD study. And did this M out here? I think these highs are higher than this high, so that wouldn't be an M. But if you started to see an M, like, this kind of action in RSI would lead me to be a little bit cautious and expect a nice dip against these lows, which you got. Did that break these lows in the RSI? Tough one. And I don't know what you have here. This is ZKIN traded on the NYSE. I'm not quite sure what that is. But I got a funny feeling that this sort of trade setup actually played out on this move here, right? If you had been hunting this bullish divergence and maybe there's a cute little fractal right there that could get you long. Can you see that fractal, Dennis? That candle, that red candle, the candle that made the lowest low, then the next candle. So really, you could have justified entering a trade right off of that level there, $1.50. Market rallies up, bang, you got like a 2x, 2.5x on your money. The very least, of course, you'd like to sell half on a double and get yourself a risk-free trade. But my hunch is that you did very, very well on this trade on a risk-reward basis because the risk window was very small. And if you got stock off up on this blow-off candle top here, you're a happy camper. I would imagine you probably even got like a 1.5 to 1 kind of idea even on a test of these highs. But I think that's your sort of market structure down there, playing these divergences. Divergence is valid. Market comes down, makes the fractal. RSI did not even make a new low there. I think your trade fires here. You could have probably done a Leanne James, 1 high, 2 highs, 3 highs, 1 high, 2 high, 3 high trend lines. So it looks to me like that's probably your trade signal right in there. And this is actually the end of the trade there, not the beginning. This is actually the end of the trade. And, probably if you did accumulation distribution, this would be a massive distribution candle. But we won't talk about that today. Anyway, long and short of it here, you can see the bears came alive. Look at me, I'm a bear, right? And that sort of stopped the bull in its tracks. So I hope that helps. Maybe we don't want to spend too much time on that topic. I did see a couple other questions. Owen says, I hate when Google does this. Owen says, Brian, just to confirm, if didn't enter trade prior to 50% level. Oh yeah, man, we talked a little bit about that. Owen had a really cool little bot set up. Oh geez, I hope this thing just doesn't leave us in the dust here. But I am working a bit there to try and sneak in off that gap. Did I put that? Yeah, here we are. So Owen asked, and this is an interesting sort of intricacy of the bot, this one in particular came back and flirted with the 66. So, the textbook definition of the bot is if it goes beyond 66, maybe leave it alone. This might have been sort of up to your discretion as to whether it would still be on your sort of radar screen. One lows, and actually it did zip up to the entry. So believe it or not, Owen, you could have actually taken 1 low, 2 lows, 3 lows, and actually taken that bot trade entry level there. And of course, it came back down against these lows. You'd be underwater, but nonetheless, actually the trade is still valid. And then put in some even better higher lows, right? Maybe you want to wait for these structural signals. It's entirely up to you. All depends on how aggressive you want to be. But the question specifically was, the trade started to get going. It ramped up, rallied up against the old highs, and then crapped out and came back below the 25 level. And the rule on the bot is just simply if we hit the 50% level, this could very easily just be a test of these highs, and then it breaks down and it actually makes a big M. So quite often we see the move stop to scratch level actually come up against old highs like that. That happens a lot. So we were just talking before we started recording, ideally as a trader, you want to try and get in on nice, clean, simple trades. If this thing had just zipped right up, that's the best case scenario. It just has got a lot of head of steam behind it. You can see momentum was building. You can see OBV was rocking and rolling here. And if this was just a nice monster bull, it just would have gone zingo right up to the AB equals CD target, and you're done. In this particular case, very choppy. This also might be a function of, remember we talked about altcoins can be, especially illiquid names, can be very choppy. That's what this kind of looks like to me. Very sort of illiquid, choppy. And in essence, we had sort of talked about this before. I think probably I wouldn't have a problem if you had said, you know what, I took the setup, I got long. It said move stop to scratch when I hit this 50% level, and so I walked away. And actually, because I front run the bot a little bit, because I took this W, I guess in particular, I actually made a couple bucks on the trade, which is fine. And really, it's that whole sort of idea that, we're just statisticians. Try not to have too much emotional attachment to this. I don't know what's going to happen to this thing. Maybe it rolls over and goes to zero. You don't know. You just don't know in this game. So, better safe than sorry. Play from a position of strength, yada, yada, yada. Maybe you want to hunt another bot setup down the road to try and get long off of this thing. Totally fine. But actually, everything I see about this trade, just walking away on the move back to the entry level, I think is perfectly fine, perfectly natural. And you might look at this and go, motherfucker, the goddamn thing worked. Son of a bitch. Well, you can't take that emotional attachment to the trade. You take the emotional attachment to the trade and you end up getting yourself in trouble. You just got to go, well, next bus in 10 minutes. So that's the nuance of the bot. Maybe you're like, well, Brian, I don't really like this style of trading. It's just not for me. I'm going to buy the W and I'm going to just risk against this W and I'm just going to ride this thing. Okay. This is just a model that I use to trade trend continuation strategies. It keeps you out of a lot of trouble. And also, I'm getting older. I want to try and keep as much hair on the top of my head. So, having rules built in when to move stop to scratch, and basically you're not going to lose money, hopefully, on the trade. And then, when can I actually start locking in profits? It helps with the anxiety of trading. So, and actually, I really like how your approach was here. You got stopped out. Well, so be it. This next bus in 10 minutes. And then, of course, our little old ladies, they're just looking to sell halves on doubles on moves up top. So they wouldn't even be interested in this quote unquote trade. Okay, so I hope that helps you. Very good illustration. And I really like how detailed your notes are here. The more detailed, the more time and effort you put into this. This is excellent journal material. You may find you take 20 of these, maybe 4 or 5 of them, end up just stopping you out at scratch. Very normal. 4 or 5 of them, you actually lose money. 4 or 5 of them, you actually trail your stops. 4 or 5 of them, you actually have your ultimate 3-to-1 target objective hit. You do the math over that entire data set, and you do the math, and you tell me. I think you'll be pleasantly pleased with the results. Okay. Were there any other questions? Okay. So, probably not a bad idea, Dennis. As we go through the next 3 weeks in the course module and material, we're going to be doing divergences every single week. So let's continue this conversation over the next couple of weeks, and you're just going to get sick of divergences. And I think at that point, you'll have a pretty good idea what divergence looks like. Okay. You're heading in a good direction. And, next week when we do MACD divs, I think, like me personally, I love the MACD divergence tool, the histogram. as the best sort of price momentum divergence tool. And once you get your head wrapped around that, I think you'll agree. It's an awesome tool. And actually, Kevin was even saying on your little idea that there's a really sweet MACD divergence in there. Where was that? This storm. Oh yeah, look at that. So another sort of illustration of divergence. Dennis, can you see this? Do you see how I zoomed in on the MACD histogram? And then we zoom in on price. And actually, this is even more pronounced. So we can go boobity boo. MACD histogram made a higher low. And you'll learn this next week, right? The histogram actually fired the bullish divergence right there. So interestingly enough, this rally here was actually the divergence signal in price right there. So that means, you were asking earlier, you want to see divergence first and then you want to see price structure. Here's a really good example of that. The divergence signal, so sort of step 2 of the 3-step process, actually triggers on this rally. So test of the lows held. Now we actually have a W. And, as I love to ask Colleen, can you see the W here? And could you take this as a trade setup? Sure. There's nothing wrong with this. Owen, you asked that, right? So we're actually getting, on a clothesline basis, we're getting actually the trade signal on this candle. Do you see how the divergence was confirmed on this candle over here? So market's officially in divergence. Dennis, do you see that? Officially in divergence right there. And now you're like, okay, now just give me a W to work with and I'll rock this thing. And now on a clothesline basis, your W is going to come in here. And then what I like to do, because I'm a cheap ass, remember this, right, is I'll let whatever this rally develop happen. And once that sort of rally has happened, then, and you can see how high they took it on this candle, then I'll look at the price chart and I'll draw my reload zones and I'll start working my bids. But remember, Brian's a cheap ass, right? Could you just buy this W level here? Sure. Nothing wrong with that at all. The only problem with this with altcoins is I often see that there'll be big green candles through the day. And then in the last hour, because keep in mind, this is like a daily chart. The last hour of trading, somebody will come along and just shit on Bitcoin or crypto. And the thing will actually just tank right back down. It might even print a red candle here. So, don't assume that we're actually going to close here until the day is actually done. So that's probably something else to add to the equation. On that intraday basis, highs and lows, this W is in now. It's in there because you can see how high this intraday bar went all the way up there. I used to know lots of guys, especially commodities traders, they'll just buy this breakout here. It's perfectly fine. You have the divergence. You got, Davos and all that kind of strong momentum and volume signals here. See the W in OBV, see the W in RSI and in Willie. In fact, you could even argue here. So is there justification to be hunting longs here? Absolutely. Does that help a little bit, Dennis? Dennis, are you there? Yes, for sure. All right, cool. And like I said, over the next week, you're going to be working with the MACD div. And then we're going to be working with Willie. And I want to see tons and tons of divergence studies out of you guys over the next few weeks. Okay, was there any other questions? Okay. All right, I think we're good to go. Let's pop on over to the Twitter feed and sort of explain Brian's rants over the past week or so. Not necessarily to toot horns. All I want to do is just make sure that if there were any sort of sometimes I say stupid things, and please understand that, everybody. I'll I'll often just see something like there was a tweet out which just made me sick to my stomach. And my knee jerk reaction is I fucking hate this world. But these things, this bullshit. So remember, a lot of this stuff that I tweet about, especially if it's not market related, it's just Brian, his emotional sort of gut reaction. I mean, these fucking, you wonder, my response here is you wonder why there are revolutions to begin with, right? But so understand that Twitter in a weird sort of way is, I do like to do a lot of market commentary, but also too, it's sort of a knee-jerk emotional reaction. I get pissed off when I see how crappy these humans are to each other. But anyway, that's another conversation for another day. So just take that the grain of salt. If you do follow me on Twitter, I understand every once in a while Brian's gonna throw out some crazy ass political comment or something. It's just me. All right, let's go back to where we last left off. Was it this one here, March 3rd? Let's see. When was the last time I did one of these? Yep, March 3rd. All right, so let's see what we got here. Cute little kitties. I love these kind of tweets. Again, is this market commentary? Is it useful? Probably not. But adorable little, and Julian absolutely hates this, right? Cat videos on on YouTube and stuff. But I love these kind of things. They're adorable. They put a smile on my face. We came out of actually last weekend with a Bollinger Band, and I love John. I think he's a really, really good person. Unfortunately, and I noticed this has happened to Dennis Gartman now, same thing. John used to be on CNBC all the time, years and years and years ago. And then, what ends up happening, it's weird, is if you become too public, then the public is expecting you to be right 100% of the time. And no one is ever right 100% of the time in the market. And so he kind of got beat up by the CNBC sort of shill machine. And I think John's a fantastic human, really, really nice person. And of course, he's got excellent tools that he's built. These are all about volatility, market volatility. And I think it's in everybody's best interest to learn this. I do have to include this in the TRI course offerings, but I just haven't had the time to finish it. But I've done modules on ATR, average true range, Keltner channels, Bollinger Bands would be another volatility study, standard deviation, all that kind of talk. But nonetheless, I put out a tweet, and Johnny himself even said he loves to trade crypto off of the 4 hours. And, if you want to throw these Bollinger Bands on your charts, I think it's a great idea. And really what we want to do is we want to avoid taking trades when the Bollinger Bands are really wide like this, because you just don't know what the hell's going to happen to price. And, in this particular case, it turned out to go sideways. But in this particular case, when the band expanded, bam, big slam down back against the bottom of the band. So this is why we have to be very careful. We actually had students in the past. One student in particular, JC, I think he runs his own advisory service now, Bull Bear Analytics, I think it's called. I'd really love to hook up with him and Jonathan again, see how they're doing over there. But he actually created, I think he called it the Bollywood setup, where if the price is actually outside the band and then enters back into the band, I think that produces a trade setup for him. Me personally, the only way I really like to trade the bands is when you get these squeezes. And hopefully everybody can see nice squeeze. And we got another nice squeeze out of this. And I was sort of tweeting out and stuff that, oh boy, bearish bot setups. And I had 1 high, 2 highs, 3 highs. I had M's working. And you can see on this tweet, I was like, uh-oh, shit's about to hit the fan. So that's basically what this was. But, if you want to, again, here's great free information for anybody who's watching this video on YouTube. Take a screenshot of this. Write this down. You want an awesome sort of when to act in the market, when not to act. Well, just wait for these squeezes. And John himself even said he absolutely loves to trade these squeezes off of like 4-hour charts. So when I saw that, I even tweeted him. I went, uh-oh, this doesn't look good. So that's what that basically was. I even CC'd him in on that. As this trade played out and somebody asked how low, right? And I don't think John's going to give you price targets. But in response to this gentleman, I said, I can't comment for John, but for whatever it's worth, I've got these bearish bot targets working. And I actually took this trade. I shorted the candle body levels here. I called this a probe trade because I really wasn't sure whether we were ready to rock and roll here or not. So it was a very, very small trade. But nonetheless, I did the trade. Live by the sword, die by the sword. And I got stopped out. And that's a good thing about a guy like me is that I'm just going to give you the straight goods. If I got stopped out, I get stopped out. So fucking what? Next bus in 10 minutes. And it's cool. John even replied with me with a nice little song about a mule. But this saying, stop like a rented mule, the old expression is broken like a rented mule, because rented mules, and that's an old saying from Mexico. They're not the best. They're often a bit of a challenge. So anyway, that's what this reference was, stopped like a rented mule. Market came up. I had my 3 highs like I just showed you. There was my bot level. Market tripped up that bot level, the stop level on the bot. I just walked away. Next bus in 10 minutes. I mean, that's just basically a trader's life. Now, I thought it was interesting because at the same time as this short trade was setting up, we also had this short trade setting up. And I remember in the actual last week's video, we showed you just as this M was firing, and sure enough, boom. And this is why I like to use the 50% rule as a price objective. And you notice nice 2.66 risk reward. Super sexy when you get into those kind of levels. Basically what this is saying is if I risk $1 and I'm right, I'm going to make $2.66. That's not bad. As long as you want to make sure that your average winners are bigger than your average losers, rock and roll. So, and it also speaks to, some markets will move to your targets, some won't. But really good example of a trade setup and using that 50% level as a price objective. And this is really interesting considering what happened next. And why I often suggest to our level oneers that don't get greedy on, say, you see this M and you're like, I want to short this. I want this going to zero. Try not to get greedy. I mean, at the very least, maybe take partial profits at the 50% level. Move your stop to scratch on the remaining if you really want to try and suck as much profit out of this. But I think, at a 2.66 risk reward, I think you just take profits at 50% level and call it a day. So really, really, and Colleen, can you see how powerful this is, especially when we see what the next image is on this feed? This is absolute testament to why I like level oneers to use that 50% rule as a profit objective. So this is, I absolutely love this about our site is, we're not reinventing the wheel. Most of the information and the concepts that we teach to students have been around for like literally, now you can say over 100 years. Dow theory and Dow tops and bottoms, that was over 100 years ago. That was developed. All the Wyckoff stuff I've been talking about recently, that's 100 years ago. Mr. Gann, that the level twoers are the automated level 2 program right now that are battling with, that was over 100 years ago. So the irony of it all is that very little of what we do here at TRI is new. And I almost find it amusing when these little 20-year-old kids who are all full of piss and vinegar start accusing me of stealing their stuff when I was doing this stuff before they were even born, which is kind of scary. Or maybe they were born, but they were running around in diapers. But this is a really, really good application of just some basic fundamentals that we teach in our level 1 program. And then one of our OGs who basically finished the entire education program and who absolutely loves TRI, he just fell in love with fundamental analysis, and he just is taking the ball and run with it. And now twice a month, we have him on our basic, what we call it, the daily brief, but our daily hour and a half long video that we do on the site. And what do you think, Colleen? Is that a pretty good service that we run, that daily video, to sort of give you an idea of what's going on? An hour? Yeah. If we're lucky, we could keep it into an hour. But, Dennis, do you watch the daily briefs? These are all sort of level oneers. Own pollution. Do you watch the daily briefs? Is that value? Does it help you on a daily basis see the market a little clearer? Excellent. Good feedback. Good. That's what I want to hear. It's brilliant. I do. It's great. Good. So anyway, the point of the matter here is this was one of our OGers. And he basically does a fundamental analysis review about twice a month, covering everything from macroeconomics and European trends. And this past offering that he had in his episode, I don't know, his slot, whatever we want to call it. He actually broke down the Bitcoin fundamentals. Yes, there's lots of people on the internet passing around these information decks. Like I said, we're not reinventing the wheel here. But the presentation that Jamie did is just so professional. And I think it really helped a lot of new people to trading to sort of see the bigger picture of what's going on. This whole idea of difficulty and the halvening events and the various cycles of how Bitcoin behaves given different parts of the cycle that we're in. It was beautiful, Jamie. And if you're watching this later on, Jamie, you make me so proud. And, this guy came to TRI and he didn't know anything before he started. And now I think he could easily get a job at any major bank as on their trading desks. Very, very smart individual. And he's put the time and effort in. So I was very proud of you, Jamie. Great job. Really, I like to sort of comment funny when we see Mountain Man reject price. And what's really interesting about this Mountain Man level, this is why, when I used to trade things like crude oil and, S&Ps and stuff on prop desks and stuff, Mountain Man, he's huge in these bigger markets. We often see in venture capital, a lot of crypto, altcoins and stuff like that the market actually has to ultimately go beyond 78.6, that conversation I had with you earlier about it ultimately bottoming off 78.6s. But in bigger markets, Mountain Man really plays a huge role. And what's really interesting about this is you see the tag there. That would have been a very difficult trade for any sort of noob in the market to take. But what's fascinating is if you actually look at what ended up happening, look how that level was just massively rejected. Isn't that cool? And this is Mountain Man to the T. I mean, this is how he just owned trading, and he was specifically a crude oil trader. But it's fascinating. And I always used to say this guy, he's making money and he doesn't even know these markets exist, and he's making money off this goddamn market. So, and you can see how he got play here. Tag Mountain Man, big counter trend rallies, right? You can see how he was operating. Then ultimately, the market lost that level. But fascinating how China rallied into that event window, Mountain Man level, and then just crapped out. Beautiful. And so we used to have a joke on the site, Donald Trump, China, right? So we used to have a joke, and then especially, China was manipulating Bitcoin price. So we used to have a joke on the site, China, don't get China. And I think we even had like a soundbite that was floating around the site for a while, which is hilarious. So I thought it was hilarious that Mountain Man just China. He just smacked that market down. So, again, if you're watching this video out of the blue, you have no idea who I am, take this screenshot. 61.8s are incredibly powerful fib levels. And yeah, as I just showed you, 61 point, where did that screen go? 61.8 just stopped this bull in its tracks. Incredible level. All right, so that was with regard to that tweet. moving on. Great to see that Cryptopia took a massive body blow, right? Most of these exchanges, they can't recover from this. And frankly speaking, I even looked at it and said, well, there goes my 1 or 2 Bitcoins that I had on that exchange. I like to use these sort of tertiary exchanges as my garbage cans when, sites like Trex and stuff delist these coins. Can I find some place to go park them? So that's what I've got over there. And I'd always asked, look, I know nobody hacked Balls coin, or I got a whole bunch of these over there. Just the funniest name coins, right? They're marginal ideas in the crypto space at best. A lot of them pretty lucky that I got doubles off of them. So they're just basically the free positions. Things like BTA Marks. I don't even know what the hell that is. MARKS, BLC, Clammy's over there, Rain, DGC, DOT. So, I sort of made the funny joke. Look, and I know they hacked you for your Bitcoin and Ethereum and shit, but I can absolutely guarantee it. Nobody stole my clams from there. They don't even want them. But nonetheless, if they can, and they're slowly trying to get back up on their feet, if they can recover from this body blow, congratulations, Cryptopia. Hats off to you. Way to hang in there through this shit. And I was I'm pretty impressed by this because this is the only time I've actually seen where one of these hacked exchanges actually survived and went on to come back. Now, there are other stories like Phoenix, for example, and the way that they got sort of messed up. I honestly believe that once Bank to the Future came in and sort of came to their rescue, that Phoenix basically became their bitch. But nonetheless, and maybe if Cryptopia has to go that route too, who knows? But hats off to you, Cryptopia. Very impressed if you can recover from this. Okay, so this is that follow-up to that Litecoin tweet that I put out, right? So remember, Litecoin came down, hit the 50% profit objective. I think it's a good idea just to take your damn profits, 2.66 risk reward, and declare victory. Because sometimes in trading, this can happen. Boom! So this is why we don't want to get too greedy on our trade setups. And what's interesting about this is hopefully everybody can see the very WE type action coming in here. So if you were in this trade and you only took partial profits, whatever, and I started seeing all these W's start coming in here, I think I'd be running for the exits anyway. But really, really good analogy where really, on balance, it's a 2.66 risk reward. I think you just take the profits and run. And, you might even argue, and some people on the site were doing this, that was this a bot setup? I don't think that went beyond 66%. So 1 low, 2 lows, 3 lows, where's the bot entry? Probably just eyeballing. It's probably somewhere in here, and that actually produces a long signal there. So, this is to sort of speak to that tweet. Pretty damn good idea. And when your profit objectives are hit, when those 50% levels are hit, you better just, take your profits and run. And speaking of which, this is the only one of the crypto space right now that's trying desperately to turn the trend corner. And as I spoke about last week, I won't go into too much detail. It makes sense that this thing should be trying to turn the corner. And as I said earlier, I encouraged all the TRI site people to let Litecoin actually pay for your trip to Vancouver this summer, because I think this thing wants to rally. And, given the halving event and all that kind of talk, the only thing that we're sort of missing out of this is if Charlie Lee came out and said, all right, boys, I bought my Litecoins back. As soon as he says that, this thing is just going to rocket. But I don't know whether he has or not. That's a total another conversation for another day. Great to see. Like I said, we're in what I would consider a coin pickers market. And if you can, just be patient and disciplined, wait for levels, wait for W's to come in, man, you're getting some incredible ideas. But I thought this was a really good analogy on, I actually, through that last bull market, you remember Richard Hart started to get all upset and stuff, and the Bitcoin bull's over, it's all over, right? And that was like February, March of 2018, following that December nutso rally. So, ahead of that sort of final failure in Bitcoin and the end of the bull, I was still continuing to nibble away on altcoins. And I find it fascinating how this coin here, I nibbled on this and I rode out the crypto winter, and I was still able to get a sell half on a double order off, even with my horrible trade location. This really speaks more to managing your money, defining what it is you want out of your trade idea ahead of time. Because this was a nanny nibble, I did not have to worry about this going off the board. Yes, it went in the shitter. I even pointed out on this chart, I kind of lost interest in this name and lost focus. And really, I've been sort of on hiatus with regard to altcoins for almost a year now. I really haven't been doing a heck of a lot in the space. But you can clearly see where the traders should have stepped in here. Beautiful W down here, just absolutely textbook. And I do know, guys like Oscar and his brother Daniel, they were like banging off doubles here. And by the time I got my double off, they're banging off like quadruples and stuff like that. But anyway, really good example that even if you're just nice and patient and disciplined, you can still make money. Now, obviously, the Bitcoin price itself is substantially lower. So, if you were trading this to make a profit in dollars, this chart would look very different. But I haven't actually pulled up this chart in dollar. It'd be really interesting to see what the difference is. But nonetheless, like the primary reason why I run the altcoin little old lady program is to accumulate more Bitcoins. And it's done that exceedingly well. And, I even put out a tweet the other day. Well, I got a bunch of Bitcoin sitting on the sidelines. What do I do? Well, all right, let's go and buy some more altcoins so we can sell halves on doubles and 200% and whatevers and get more Bitcoins. So just here's a really good example that we're back into sort of a friendly market for altcoins. And if you were just really patient and disciplined, nothing, you just sat there for a year and did nothing and twiddled your thumbs. On paper, yeah, assets look like shit, but those are paper. It's not real. It's not realized. You can't really, ironically enough, you can't really take personal offense to a paper loss. It's just a paper loss. And then conversely, if I didn't sell here and the price was sitting up here, can't really declare this a victory because it's just a paper gain. As soon as I got my sell half on a double level, which was my trading plan, well, then you can pat yourself on the back. But you can still earn on the smaller moves, right? Well, this is that little old lady nanny nibble strategy, Colleen. So it's basically says, look, I'm going to buy an asset and look to sell half on a double. Could you have actually sold through this rally here if you were trading a setup? I'm going to buy against the low ends of this range, and if we break the low ends of the range, then I'm going to get out, which sort of defines your risk as a very small amount. And could you got a 2-to-1, 3-to-1 profit on this spike right here? Totally. But the trading plan specifically was I'm looking to sell half on a double. And if anything, this is a fantastic analogy that ironically enough, this took like what? Just about a year, a little bit over a year, with a little old lady who's busy playing canasta, is busy, in the garden, whatever. Would she really be too upset if it took her a year to double? I don't think so. And I used to have retail clients, but if it took a year to double their money, well, they can live with that number. It's not really that big of a deal. Now, obviously, a lot of this has to do with the Bitcoin price itself. Probably not a bad idea. Why don't we even do that? Just see. Let's see whether on actual dollar terms, whether we actually made any money here. I actually don't even know. All right, so there in dollar terms, basically that was a scratch trade. So that's interesting. But remember, I'm not really here to make a monetary gain out of this. I'm here more for to collect more Bitcoins. And the irony of it all here is that in dollar terms, wicks and tails like to be eaten. There's still lots and lots of potential up move here. You can see where the top of value is. That's at $5.58. So if you would trade this on dollar terms, right? So that's where we went in right there. And that's 279. Then in essence, that 5679, the test of value, you can see the little notch up there. If I was trading this in dollar terms, I would have my sell half on a double order sitting right up there. So in essence, this actually, how ironic, it actually worked out to just be a scratch trade in dollar terms. Thought it was really interesting through midweek to actually see all this sort of non big coins all start to take off here. And we often find in this space that the non big coins, big coins, not Bitcoin, the Schult coins, if you will start to rally, and then Bitcoin will be like, whoa, 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 what the hell are you doing? And then it will start to take off, and all the Schult coins will start to calm back down. And in a weird sort of way, I actually kind of think that's what happened here. But nonetheless, really, like I said, coin pickers market. It shouldn't surprise us that a lot of these Schult coins were taking off here. If our Schult index puts in this nice W, and this is a great little tool to build on your own platform to just give you an idea of where the money is flowing on any given point in time. I spoke about Daniel earlier, and what was really interesting was this. I got an interesting response. Don't really understand your point. You place buys when market structure is right across many altcoin markets. Recent pops are scarce. And yeah, you got the occasional sell half on a double. Well, yeah, that's exactly what we do. So I don't quite understand that. Daniel has taken this to the next level because he's been very, very focused. And so I just suggested to this person, I don't know who it is, I said, you know what, you might want to follow Daniel because, I mean, this guy is just kicking it and just an excellent example of a TRIer that's focused, that has his plan well vetted, and he's in there day in, day out working his craft. I'm so proud of you, Daniel. And, a lot of TRIOGers. We've created some just absolutely beautiful traders. Great example of the stuff that we do works in the stock market. And if you don't think that you can have stocks go parabolic and these absolutely insane face rips and doubles and triples and quadruples, well, here's a great example of a stock that met our VCIM screen, and I sell half on a double. And this is sort of the whole purpose of same thing I did in altcoin land over the past 3 or 4 years. Well, I'm going to do the same thing in the stock market now. I have a big enough account to actually trade stocks in earnest. And so, basically rinse and repeat. Doesn't really matter whether it's crypto or whether it's the stock market. Try and, get yourself into a risk-free trade. I think that's a good idea. And I remember when I originally tweeted this out, I was kind of like, best practices. Let's demonstrate good behavior, blah, 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 sell half on a double. And now we're just going to let the rest of this run. And frankly speaking, I don't know where the hell the top on this thing is. Now, these kind of gaps, when they're that big and they're that crazy, that's probably going to need to be filled in. And you could even make an argument that there's lots of gaps down below here. There's a big gap right there, cheeky little gap right there. This probably is like the end of this move. But the bottom line here is try to get yourself into a risk-free trade. And on altcoins, it's the same thing. And then just let this thing go. Let's see where it goes. You just never know. And the great part about with selling half on a double is it's not your money at risk anymore. It's the market's money. So am I going to lose any hair over what this thing does going forward? No. Am I going to enjoy the ride? You bet. And who knows where the hell this damn thing goes. And a really good sort of working example from years ago that we did in the exact same model was it was like Millennium Lithium, crazy ass name. And look where this thing went. I mean, now you can sit, you look at it and go, oh man, that's a bear. What a piece of crap. But we actually got the signal exactly the same. Remember that ABM I bought at like 16 cents. So we actually got the signal to get interested in this thing right here. And I told you about Mr. Aristocrat or Landed Gentry. He actually bought this thing. He was like, okay, well, let's see if Beamish's theories work. And he said he came home one day from work at a really crappy job that he absolutely hated. And he loaded up his stock account. He hadn't looked at it in a while. And it was up like 10, 20 grand. And he couldn't figure out why. And the answer is, holy Shiite Muslim. That goes out for Reza. And the irony of it all is that wasn't even the top. It actually, I think, went higher. Isn't that incredible? So you can't tell me this stuff doesn't happen in the stock market. The question is, can you find good structure? That's the key at all this, right? Just kind of a funny analogy of what happens in the stock market. Same thing happens in the stock market as we've seen in crypto. It's not really any different. All right, let's keep moving forward here. Core, yet another one, a coin pickers market, and I love this one. And this was one that I actually did go and start doing more nanny. And I think about sort of middle of January, February, March, I could feel that the like especially with the Bitcoin testing that 3,200 lows. I saw a lot of these altcoins were starting to come down, put in bottoms, and hopefully everybody can see this W against here. This was a reload zone. So basically that was basically a breakout level there. So I went and picked some up off of this level and boom, Merry Christmas. Nice double. So this is what I sort of mean by coin pickers market. And this one happened to be a relatively recent trade. So, Bitcoin's basically sat in a range here. So that's just an outright double. If you wanted to sell all of it here and take all your profits, perfectly fine. I think it's worked its way right back down to the original bottom here. So, caveat emptor, do what you will. But great trade, and example of what I would consider a coin pickers market right now. Now I like this kind of talk, and this is probably one of the reasons why I actually even do crypto Twitter. Most of the stuff you hear on crypto Twitter, oh my God, they're just evil, and it's sad. They like to make fun of people and all that kind of stuff. And it's very, snickery. But every once in a while, these guys drop gems. And so this gentleman here, and I have a great deal of respect for him, Bitcoin Dad. I think he's a very smart guy. He listed a whole bunch of names that he was interested in. And so I actually went and I owned a bunch of these, but there were some that I didn't own. So I just looked into the list. Some of them are listed on TradingView, some of them aren't. So, be aware of that. I actually, just for, I was like, TRIers, pay attention, right? We always in the level 1 course, we try to, like Brian's the rational investor, right? That silly logo, the rational. What is rational investing? Well, what I want to do is I want to build like a list of fundamentally acceptable ideas. And, when I start hearing rants from, or, not rants, but tweets from people like this that put out their list that these are some of the names that I'm holding, then at least it gives me sort of a starting place where to build my sort of fundamentally acceptable list to fish off of. And then and I suggested to all TRIers do the same thing, right? And later on, in fact, I even responded to that. I had said that somebody, I think, when I did that, somebody mentioned back one of the coins that I happened to be talking about with Dav. And my response was, well, that was probably more luck than skill that this thing's been moving up. I know I suggested Ubic, and Ubic's gone the other direction, so go figure. That was really interesting that this gentleman also likes Ubic too. So, kind of one of those sleeper coins that maybe you might want to seriously consider taking a look. at is this Ubik. It's weird though. I don't hear from Alex anymore. I don't know whether I said something wrong, but if I did, I apologize, Alex. But I have even tweeted him out, but I don't get any response back from him. So obviously, I said something wrong. But I hope he's doing well, and I hope the Ubik team is doing well. But anyway, these names, and I actually just put a screen together, and I just said, if I was going to buy these names, where would I work some orders? And just full disclosure for the YouTube audience, I actually did actually get filled on one of these orders. Here's that list. I've added a couple other names that I'm interested to that list as well. You can see I've got a bid. I said buy the breakout on this HAXRO if it can jump up through there, but it's stalling. So I've got a bid working against these candle body lows. I wouldn't mind getting some of that off of those lows. Shift, same sort of thing. Draw your reload zones right off of this big spike up here. And there just so happens to be a gap right at that level, kind of like what I showed you off of Kevin's idea there earlier. I absolutely love, no, what was it? It was like Storm or something like that, wasn't it? Where did I put that? Oh, well, I don't know on here somewhere. I was showing you guys earlier, right? But too many charts. It's going to explode. Ah! Oh, I guess I got rid of it. I thought I had it on here. Oh, well. I don't see it. Where did you go, Storm? Flow, sphere. That's weird. Oh, well. I showed you the chart earlier, so, just go and look at that idea that Kevin had. So that's frustrating. I don't know. I guess I closed the window. Oh, well. This is going to drive me crazy. Silly Brian. Anyway, point of the matter here is these are these bid levels. You can see I've got bids working. You see how there's gaps just basically off 78.6s. This happens to be a candle body low. But notice how there seems to be a very reoccurring theme, right? Gap right at 78.6. Gap right at 78.6. Gap right at 78.6. This one, gap right at 78.6. So I've gone to work some bids, and I got a fill on this bad boy this morning. So full disclosure for the YouTube audience, I just went and bought some of that I basically said on the tweet. If I was going to buy, where would I be a buyer? Well, you can all rest assured I got filled on this expanse trade. Merry Christmas. Ho, ho, ho. Interesting conversation with some stock market OGers, and these guys are serious OGers. We did have a basic site member who came in and just basically tried to glean as much as he could from the basic site membership and go and build algos and stuff. And frankly speaking, I was a little pissed off at him because he got in on this conversation stream. I just simply wanted to note, I thought this was an excellent analysis piece by Mr. Deemer. And he's a friend of like John Bollinger and John Murphy and stuff. And this person likes, where'd you get this stock in this chart? And he replied back, stockcharts.com. And then this gentleman went into this whole fucking shill about his indicator and how wonderful it is and how you should sign up. And I was just like, please don't embarrass me in front of these stock market veterans. You're going to make me look like an idiot. So I was a little pissed off at that. But nonetheless, really good tool to follow stock market tops and bottoms, the put call ratio. But the problem is that TradingView, I don't know why, but TradingView doesn't carry the put call ratio. So we have to go to sites like John Murphy's site, stockcharts.com, and you can clearly see pivot and put call ratio, pivot in the stock market. Did we just pivot in the put call ratio? Did we just pivot in the stock market? Yeah, you can clearly see the W coming in on the put call ratio and the rolling over of the stock market. So this is a great tool to add to your tool belt. But don't hop on these tweets with, stock market old timers and start shilling your product. You're going to, and if it's off of mine, maybe contact him directly and shill your product, but don't do it through my tweet because you just make me look like an idiot. These people are going to look at me and go, that Beamish guy, what's he doing? Ugh. Anyway, real nice to wake up. Here was another great example of a buy I did before the stock market or before crypto broke down back in first quarter 2018. And of course, most people who bought stuff like this through this market, they probably gave up by this point in the cycle. But I just simply said, look at, I bought the Mountain Man level. You all know Mountain Man. I suppose if I had bought the Mountain Man level, I was risking against these lows down in here. I don't know. This is a tough one. This is another good example. I think I said earlier, I don't really like to quote unquote trade setups. All right, Jonas, take it easy. Don't really like to trade setups off of these altcoins because as you can see, these tails really nasty. A bit dangerous to be, going in here because these little tails can really mess you up. But anyway, nonetheless, nanny nibble trade off of Mountain Man. It emmed out. Oh boy, trades failed. But because it was a nanny nibble, I'm in no hurry. No big fucking deal. Just let your money work for you. And I thought this was a really, really good analogy in that you notice reload zones. And if you're just patient and just wait, notice, gee whiz, the big old W comes in. Colleen, can you see this W in here? Down, up, down, tested that level, down, breakout. In fact, there's like two W's here. I don't know whether, Dennis, can you see that? Making lunch. All right. Anyway, the point of the matter here is she W'd, and what a coincidence. Basically, the W comes in right off of the reload zone. And this is what I often see. It's almost cliche. And you might even argue that the ultimate W down here, down, up, down, breakout, actually came in right off of that 78.6 level. So, learn from this. Take this screenshot. It's such a great, simple analogy of what it is we do in altcoin land. And sure enough, most people would have thought this thing was toast. It's all going to zero. But in actual fact, the ultimate W and where to buy, ironically enough, came in fairly close to where I was long. And big rally, didn't freak out. We had a nice rally, then it pulled back. All the guys that bought these bottoms down in here, of course, they got paid on that rally. So you know that these guys down here that bought these levels, they were taking profits here. But, this was my double level. It was either going to get hit or it wasn't. Patience and discipline. And sure enough, boom, Merry Christmas. And yet again, it took just a little less than a year for our little old lady to double her money. Is she a happy camper? I think she's perfectly fine. Which is really interesting about this, and really double your Bitcoin. That's probably the better way to say this. But what's really interesting about this is that they came out with a great fundamental driver in that they were going to work with larger, I think it was Samsung, and integrate their product in the Samsung products. And, as this sort of says up here, and I don't mind broadcasting this to the world, exactly where the little old lady is going to have her next sell order. Ahead of time where I'm going to be. It's no mystery. Keep it simple, stupid. And the irony of it all is that the next double, that double took like a year to happen. The next double happened in like 3 days. Bang, bang, bang. And another fill. Merry Christmas. Woohoo, party. So now we're at 200% profits booked. Still got a bunch of coins on the books, right? And you should all be able to tell me exactly where my next sell level is. And this is basically how we took $500 and ran it up to hundreds of thousands of bucks into that crypto bull market peak. Just doing this day in, day out, rinse and repeat. Keep it simple, stupid. Okay, so that was those tweets. Oh boy, now this is interesting. And actually, this, I kind of like the idea of when the stock market sort of tops out, crypto catches a bit of a bid. I know that there's people that have done this sort of study that says that crypto and stock market are highly correlated, but nonetheless, really great sort of working study on what do reversal tops look like. Colleen, can you see the M up here? This is the NASDAQ weekly top. These concepts are universal. Doesn't matter whether it's a cryptocurrency, whether it's the NASDAQ stock market, or whether it's broiler chickens. And that's sort of the name why we gave this show this name. So M top, outside downside key reversal, market loses its lunch. We rally back, and gee whiz, where do we stall out? Right in reload zones. I mean, this stuff is so cliche, it's ridiculous. Now, I was asking through this event, do we actually carve out another outside downside reversal into the end of the week? If we had closed below this low 2 previous weeks, then this would actually be called a key reversal. It turns out that they actually, and it was really interesting studying the derivatives data. Wall Street had a huge incentive to the tune of about $1.4 billion worth of stock they would have had to have bought if they couldn't get the market to close above 170 here. So there was huge incentive, and that's sort of the thou shalt not pass, right? That's that line there. And you can see on the open, and remember Friday was pretty bad day, and there's that outside downside key reversal we're watching for. But you can clearly see they brought the market down into that 170 level, and somebody said, that's as far as you go, right? And there was no way in hell they were going to let this thing close out below 170 because, like I said, Wall Street would have been on the hook for like about, $1.4 billion worth of stock they would have had to have bought. So really, really great analogy of option pins and where you can use option information to get a pretty good idea of where institutions are not going to let the market go any lower. So watching through the day, really interesting sort of end event here. This was the end of the day, and gee whiz, you can see they did not let the market close below 170. No friggin' way in hell they were going to let that happen. But what was interesting too is there was enough buying pressure into the end of the day that they actually took back the key reversal as well. All this really is just a down week. Candle bodies, yes, engulfing bar. And it is a weekly one, so don't get me wrong. This is a bearish price action. And gee whiz, notice red boxes. This is a selling window anyway. Bearish day, bearish action, no doubt about it. But at least they took away the key reversal signal. If this actually ended as a key reversal, I think the market would have just cratered this coming week. We might still work our way down here lower, but I don't think it's as nasty as signal. You notice when this key reversal came in, the market actually gapped lower the next week and just didn't look back. Notice too that there's a gap all the way down here at 152. So I wouldn't be surprised that we actually have to work our way all the way back down to this 152 here area on tech stocks. I won't go into any more greater detail about this right now, but it's actually quite interesting if you do the first 2 week study and understand things like sector rotation models. Technically, if we're in the part of the economic cycle that the first 2 weeks guys think we are, then tech stocks actually shouldn't be outperforming. So, the end of the quarter is the end of March. So if tech stocks shouldn't be outperforming, then it makes sense that they've exhausted themselves and we're actually going to see a bunch of this rally given back so that we finish the quarter where the first 2 week sector rotation guys figure that we should finish it. All right, that's quite a mouthful there. Hope you guys understood that. Now, I thought it was really interesting. The S&P 500, the big stock index, it did confirm an outside downside key reversal off the weekly charts. Nasty, nasty price action. And again, what a coincidence. It was right off of good old 78.6. Hopefully you guys watching this after a while have started to come to realize how powerful this 78.6 fib level is. It's remarkable. So the S&P 500 itself has confirmed this key reversal. That's not a good sign for the bulls. And again, I think on balance, it makes sense that the stock market should calm down here a little bit. I was putting out through the week, DTA. I'm very interested in finding places. I was banging out those doubles, so that means I got to whack a Bitcoin to find, places to put it. And I'm seeing names like this. Now, I actually loaded up this company's website. Yeah, they've got a lot of coins out, but again, that sort of speaks to the amount that they're, the price of this thing, 23 sats. So it would make sense that they have a bazillion coins out. But, Dennis, can you see the OBV divergence here? Notice we made a lower lows in price here against that low, but look at OBV. Not even close. Do you see that, Dennis? So there's another really good example of an OBV divergence here for you. Dennis, are you here? Dennis must be making lunch as well. I have a nice little MACD divergence that actually confirmed on this move here. I don't know whether we have Davos, W's in OBV and W's in price momentum indicators. But long and short of it here is, gee whiz, that's an attractive idea. So full disclosure, I am working bids in reload zones to try and get myself into this trade. When you are doing little old lady, do you look at any indicators? Well, yeah, because, yes, and how do we say this? Location, kind of like what we said in class today. Location is the most important thing I want to see. Location, location, location. And of course, if we pull up this price chart, you tell me, are we at or near the bottom end of this price range? Hey, look at that. Nice little rally going on there. That's this one here. And I was mulling around just buying the breakout level, but they're not giving me any fills, which pissed me off. So I pulled that bid. I don't want to get greedy here. So there's my bid, 78.6, right in that tail. We'll see if I get lucky and I can get a fill here. But, you tell me, Dennis, are we at or near bottom end of a trading range? This looks to me like we are in Crater Central here, right? So the biggest thing I want to try and avoid like the plague is, let's say you see this W here and the market rallies up into this high here. The absolute worst thing I can possibly do is think about being a buyer up here, right? Long, long way from a reload zone. In this particular case, right, you might have said, okay, well, that Beamish guy loves that 78.6. I'm going to buy here. If you little old lady this, well, frankly speaking, I wouldn't have a problem with that. And really, I would just say, well, I hope you're continuing to nibble. We are at the bottom end of the trading range, no doubt about it. If you want to wait for the next W to actually confirm, thinking structure, you can see how the market tried to W here and just it couldn't get going, right? It perked up through here and said, yeah, my W, well, yeah, sort of. Could you have been hunting a trade setup through here if we had divergence and you were taking maybe like this W? Said, look I'll take this range and risk against these lows. Then you got stopped out eventually on this move down in here. Painful, pain in the ass. It failed. Sucks. I do know guys like Scott Carney will say, if I'm going to take this this W here, and I've got a nice trend line to work with, then, the breakout here, if we lose this trend line, I'm just going to walk away. I don't mind that. It's a little bit more advanced. That's more like sort of level 2 stuff. What I like is, and this is really to try and just help you have confidence in the trade idea. is, if you looked at price on this reload zone and you are new to this sort of site, do we have any sort of W's, and new to trading? Do we have any W's in the indicators? Well, we don't even have any MACD information here to help us see a W. So I don't know whether that would have sort of met the level 1 criteria to consider this trade. Then if we move over to here, and we're seeing this potential W coming in here, do we have any divergences here? Do we have any sort of Davo signals here? Not really. Then we come over to here, and of course, we're not buying against the top end of the range, so location is perfectly fine. Now, do we have any signs of divergences here? Yeah, we're starting. We had a nice little MACD divergence. Right, there to there to there, breakout. We showed you that OBV divergence, huge signal here, right, up through here. So at this point, I feel more confident in taking the trade. Nanny nibbles. I'm perfectly fine just nibbling away on these ideas. But I do understand for like level oneers, a little bit higher anxiety. You want to, frame your 3 reasons for a trade. Do I have location? Yeah. And really, we could even do things like extension studies. We could go there to there and then draw an extension. And notice 113s. 113s are often pretty powerful. 127s, 0.2s, not bad. We could even go, this is an awfully big one, but there. So we're coming into here. It's 144 and a half. 127, that was sort of that level there, which failed. Not really getting any sort of extension levels here to work with. Honestly, I think what this really speaks more to is this looks like an El Tangonator. So, I like the idea of using this high up here. I would draw my level there to there, and I would just simply say, what's a 50% roll? That happens to be, what's that say, 51 sats. So it's actually interesting that I'm trying to buy here around 20. Can you see how that's going to double my money if we get that move back to the 50% roll? So if this is sort of like El Tangonator kind of thinking, notice too, there's a little cheeky gap right there. So that works as a really nice sort of price objective. I like this as more like a trade setup, but I also like it as a nanny nibble. And really, I don't have a problem if you're like, well, Brian, I want to take it slowly. I don't want to just go and spend my money willy-nilly. So I'm not just going to work, nanny nibble bids against the bottom end of ranges. I'm going to do nanny nibbles, but I'm going to do them off of, actual W's. I don't have a problem with that whatsoever. So that's basic. Like looking at that chart right there, this to me looks like a fantastic little trade idea. And if you want to, the only problem, like I said, with these altcoins is that you could have somebody watching this video and just simply say, okay, well, that Beamish guy, he's going to set up a whole bunch of people to, buy this breakout. And their stops are going to be just below this low here, 18, 17 sats. So I'm going to run it down there. I'm just going to push, see if I can trip up their stops. And so I wouldn't be surprised if there's a little FU. So that's why I would prefer to do this as a nanny nibble type trade. But, live by the sword, die by the sword. If I'm going to take this double bottom, and if this W is legit and it's for real, and I ride it up to the 50% roll, well, you can see that's more than a 5-to-1 risk reward. I only have to be right, 20% of the time just to be a scratch trader if I'm just hunting 5-to-1 risk rewards. So again, and this sort of speaks to a coin pickers market. I think that we're in that kind of coin pickers market. So if you traded this using this sort of setup, and I think I might even go off of those clotheslines, and risk to new lows, right, which is, I guess, about 16 or so. And I use the 50% level. And why don't we use that gap as the target? Because I think that's perfectly realistic. Oh, you can see that's, like I said, 5-to-1 risk reward. So why don't we watch this? Let's do this as a case study on the site, and let's see how this plays out. Okay, Dennis? I'll post that in the lounge. There it is. And we'll call this Dennis Ryan case study. So let's keep an eye on this and let's see what happens. Okay? And everybody. But we'll call this Dennis's trade. Okay, I think that basically brings us up to date. I've been blabbing here for a couple hours now, so I should probably wind this up. Where's that page? There it is. Really good example of Wyckoff here. You can hopefully see the big W down here. And you can also see a bigger W. Somebody's clearly trying to establish some sort of floor here. Market goes zooming up, right? And we like to just work our bids off of, 78.6s, that kind of idea. But notice that when the market came back down and checked that original double bottom breakout, it actually was rejected. There was so much buying interest that the price actually stopped going down and started going up, and actually painted a cute little W here. And I think I had made reference to this earlier. Bitcoin did exactly the same thing back on that auction event. And I would argue this was absolutely textbook Wyckoff. Where the hell's that chart? Where do I have that? I think I have it over here somewhere. Yeah, here. Where market took a while to put in this bottom, then sprang up and came slamming back down into this original bottoming area and was rejected back up. Basically carbon copy. Keep in mind, this is a weekly price chart. If I change this to a daily, does it screw everything up? Yep, I knew it would. And if we go to a daily, can you see the similarities? Colleen, can you see the similarities between that MCO, right? Wide bottom, big pop, market comes back down to the original bottom, and in essence puts in a W and says, nope, that I'm going to check that breakout level. I'm a bull. Away we go. Do you see that? Dennis, do you see that? B. Bloom, do you see that? This is what they call a Wyckoff check. Now, you don't know what's going to happen. Remember, guys, nobody knows what the future is. I don't care. Anybody tells you they do not know what the future is. But at the same time, too, there is a cute little W. So you might have looked at this and gone, you know what? I love that W. I would so love to get in there. But, that if I buy this W, that means I have to risk all the way down to here. The market is actually giving you a very polite, cute little W to sort of frame your trade. And gee whiz, what a coincidence. It's right off the damn reload zone. I mean, exactly where it's supposed to W. So in essence, the market is actually giving you a nice little window to frame both your entry and your risk. And, if this floor falls, well, then you just walk away and let the price do whatever it has to do. So Dennis, can you see how using the check of the reload zone and then waiting for a little W, it actually helps frame a risk? Yeah, it is cute, isn't it? But that's the pansy ass feminine side of Brian talking. I'm not allowed to say, I'm a trader, damn it. There's nothing cute about this. Price action. Where's my Lambo? All right. All right. Now geez, I got a couple more here. So a couple of things that I wanted to mention. I was a little concerned about, this dump on Friday. I was very pleased to see the market rally back smartly off of that dump. So somebody was clearly liquidating a position into the weekend. And, I think they were liquidating through here, but then we started tripping up stops and stuff, and this turned into a cascade event. So really, we have to watch this tail. This tail is actually extremely telling of the market. What should happen is we should come back against these candle body lows, and we should see that, keep in mind, this tail meant that there just wasn't any sellers in this area on the market. The market went down, and then buyers just quickly snapped everything up and took the market right back up. So this now becomes a very important window going forward. There's an old adage in the market that says that wicks and tails like to be eaten, because really we haven't discovered whether the sellers actually were serious through this or not. Um, and I often, like day trading, especially, crude and stuff like that, I love to use candle body lows against these tails. Notice this over here on Bitcoin. I don't know whether you can see that on YouTube or not. But notice how there was a tail here, right? And then the market came down. Notice these candle body lows, and we rallied up. Notice how the market came back down. It explored the tail. And I love to use those candle body lows for trade location. So let's keep a real close eye, specifically Bitcoin on Phoenix, for this 39.25 level. That's going to be pretty important here going forward. And on Ethereum, it just so happens this 135, 136, call it 135 level, super important level. And then on Litecoin, same sort of thing. We want to watch this sort of 56 and a change, maybe, low 57. I think it's 56 and change. So, and I was a little disappointed on the counter trend rally on things like Ethereum. We couldn't break to new highs. And I think, ironically enough, I think it was actually Ethereum that was sort of led this sort of selling. So, somebody was posting out today. So what do you think? You think the market's going higher, the market's going lower? A little concerned that that tail there hasn't been addressed. We really should go and address that tail. And maybe what they're doing is they're setting up the market for some sort of late Sunday dump into that tail event window. So you notice that this is sort of real time. Notice how Litecoin is working its way down to that candle body low, right? We got lower highs and lower lows. It went up and flirted with new highs, probably a cute little stop run there. Same sort of thing. Wicks and tails like to be eaten. So I really want to watch to see how Bitcoin and all of these act off of these candle body low levels. You can see, look at that. Remember I'd said earlier, it looks like Ethereum sort of leading the charge here. So you can see Ethereum is sort of starting to dump a little bit here, and it's coming into that candle body level. So what we really want to see is, how does the market act when it comes into these tails? Because there's an old adage in the market that says that wicks and tails like to be eaten. This doesn't really want to be left unaddressed. Sometimes the market does leave them. And then ironically enough, maybe weeks or months down the road, the market dumps into these levels and it stops at these levels. And you go, oh, that's why the market stopped, because it came into a tail. So we'll see how this goes. But somebody was asking me earlier, well, what do you think, up or down? Or they were just sort of asking rhetorically on the Twitter universe. My knee-jerk reaction is that Ethereum is actually already M'd out. And interestingly enough, Litecoin was sort of leading the charge of everybody, and it just felt like Litecoin got exhausted. My hunch is this move here was on a divergence. So let's see if that's the case. Yeah, you can see OBV did not make new highs, even though price did. MACD, nowhere near new highs. Very suspicious there. You can even see on this move to new highs, the oscillators actually didn't make a new high on that pump. That was actually on this bar here. Not confirmed divergences yet. That's good. Suggesting that we haven't broken yet, but the pieces are in place. And considering that this MACD divergence goes all the way back to this original peak here, the pieces are in place that if this thing did break, it shouldn't be shocking. And of course, we look at the range. I suppose the last significant pivot dump was these lows here. So just as we sort of said, and this dump was that 50% retracement, we should actually be looking for Litecoin to come down to sort of 52 bucks here. That really shouldn't be a surprise to anybody. And then, of course, volume profile. If we look at the profile, you can see there's a lot of business that still needs to be done in here to fill in the profile here. So probably on first blush, we have a situation of Hoag's value trade. So you can see where value high is, right in this area here. And this is actually a great commentary on that tail. So if the market dumps into here, and we used to draw on our charts that this is a MUOC, so it should be filled in anyway, right? We go like that. This actually becomes like a magnet for price, right? Filling in the profile. But if we dump into here, into that tail, into these tails, right? Clearly, there's some sort of massive sort of buying interest at this level here. If we dump into here, and actually for the bulls, what I'd like to see is we dump into these candle lows, lots of buying interest comes in here, fills it in, and we don't go any further, right? Maybe we W out and then higher lows, and that sets up our next bot trade taking us higher. But if we come into these lows and we lose these lows, then we could potentially have a Hoag value trade where if we accept back into value, right, maybe we come up, then rally up, and then dump. So you get sort of structure that accepts into value. Then 80% of the time, we actually have to go down and revisit value low down there, which would be, gee whiz, there's a big old tail that's left unaddressed. Maybe we have to come down and eat that tail at that point. So really significant. And considering that Litecoin sort of leading the charge here, I think it's probably in our best interest to keep a real close eye on how Litecoin behaves here. And as I said, we haven't broken per se. I still think that there's a lot of sort of back and forth, especially against this tail here and this level and this level and that high. I think there's a lot of business that still needs to be done here. And very rarely markets V-top. Usually markets like put in a very wide sort of M to sort of signal the end of the run. So we'll see how that goes. I mean, could you argue that this was a nice little FU move and this is the M? Could be. And if that's the case, then what that means is, again, like I said earlier, what we really have to do is watch how the market's going to act against this tail. So if you're a bull, what you really want to see is you want to see the market come into this level and just stop on a dime, right? That level there. And you could argue that this tail is that exploration of that tail. That level right there, same sort of thing, right? And then, of course, that level there. So we'd really like to see the market come into this level and then turn back up. So let's keep our eyes peeled. As I said, over the short term, Ethereum seems to be leading the charge here to the downside. I think it's going to be a huge battle at this tail. And interestingly enough, Litecoin actually is a lot stronger than Ethereum is here. So we may find that Ethereum is actually driving the bus. And in a weird sort of way, I don't think it's Bitcoin that's actually driving price action right now. I think Bitcoin's acting very sort of reactionary, but same sort of logic. And actually, there's another sort of chart that I'll show you just sort of finish this conversation off. I had taken like that bot trade, like I told you, 3 lower highs. I was thinking dump. We did dump. And it was actually interesting on that event. This was a Davo. And I actually asked Dav, what do you think? Does this get your seal of approval? And he was like, yep, but you got to get the Davo laugh in person. I didn't take this. I actually shorted this. And I just said, okay, well, that's fine. I'll risk against these highs. And slowly the market churned up and stopped me up. And I even did another probe short up in here and got stopped out. And the irony of it all is heading into the weekend, I was actually, quote unquote, right, for whatever that's worth, in that I was using this 50% rule as my target. But these sons of bitches, in typical trading, that's the way it goes. I think I actually took this short up in here. There was one more move to the upside to stop me out. Actually, no, I think it was off of this high right in here, but I was trading OK coin. One more move to the upside, and then, and the cool part about it, right, is if you draw the 50% rule, this was the move I was looking for. So anyway, the market did ultimately do the 50% correction, but not before busting out my little probe shorts. It's trader's life. It's the way it goes. Interestingly enough, after this 50% rule, kind of like what we saw in that Litecoin, market ratcheted right back up and went to new highs. So anybody who just blindly shorted down here, oh, they got their lunch handed to them. Tough trading on Bitcoin. But I really don't think Bitcoin's leading the charge. And it's funny because our resident bear, he doesn't actually trade too much Bitcoin right now. He's all over Ethereum. He's trading Ethereum like it's the water. And the irony of it all is when I look at this chart, like I showed you just a moment ago, it looks to me like it's Ethereum and it's Litecoin and stuff that are leading, and Bitcoin's just following. So it's funny how people are asking for price predictions out of Bitcoin, but I think that the traders are actually trading things like Ethereum and Litecoin much more than they're trading Bitcoin right now. But, that's just speculation. All right, so the point here is that because of this original range, 33%, 66, bot came alive here, hunting 3 lower highs. Technically, I'm still in bot hunting mode here. I'd like to see a nice sort of rounded price action. And I do find it interesting how, if I draw that same AB equals CD concept, AB, CD, not only does it take us down to the bottom of this megaphone, right? Something like that, down to the bottom of the megaphone here. It's interesting when you zoom out, right? And we look at profile, you can see that there's still a funny little notch down here that needs to be filled in. So that could validate that. This is actually original double bottom, actually way down here. Wicks and tails like to be eaten. There's still some unfinished business down there. But what I thought was really interesting about this, and this is sort of what I'm going to be watching going forward here, is hopefully what you see is that the bot entry level, gee whiz, there's those candle body lows. So I had sort of said earlier that I fully expect all of these markets. Let's see if I can find it for you again. Where are you? You're around here somewhere. I think that was it. Brian, you silly bug. Nope. There we are. Candle body low, candle body low, candle body low, candle body low. I don't know about XRP. XRP is a funny character. But going back to that Bitcoin chart and sort of how the bot would set itself up, there's that candle body low. A little worried that what's going to end up happening here is we come into those candle body lows. Everybody's going to be like, oh, sky's falling, sky's falling. But notice we're at the bottom of value. And then we'll have to come back up, right, and paint those 3 lower highs to create that bot setup trade. So I think this is still developing. I think this is going to take a lot of time. And there's no reason whatsoever the market can't turn up and go and bust this high because it's just a floating high. Wicks and tails like to be eaten. You can see there's a big old wick right up there. I would imagine the professionals, they're going to be watching these candle body highs like a hawk in here. And I wouldn't even be surprised into, like Monday or Tuesday, Wednesday, London kill zones, all that kind of conversation that we actually set up. Oops, where'd it go? That was weird. Let's try that again. Reload zone. Boom. There it is. Oh my god, it's 1,000,000 miles long. I wouldn't be surprised if... Oh, come on, you. I wouldn't be surprised if... oh, look at that. I'm so incredible. So there's those candle body highs. There's 78.6. I just eyeballed this, right? There's the bottom of whatever move that is. If the bottom of this move comes in right around the 25 level, right off those candle body lows, then it sets up the shorting window for the pros if they want to take a shot on the short side right up in there. And that's sort of what I would be thinking here over the short term. Now, let's get the market to put in 1 low, 2 lows, 3 lows, and maybe we have a bullish bot that takes us to new highs. For me to actually get on the short side and start thinking short, I'm going to need some more time to develop here. So that just sort of gives you a sort of an update of what I'm thinking here right at the moment. I think basically we're in a trading range, about 3,900 to the downside, 4,000 and change to the upside. Pros are going to be looking to hunt short setups off of these candle body wicks. Keep in mind, this is Phoenix, whatever market you trade, slightly different. And then candle body lows. There's a little bit of a playground here, especially against bottom of value. And my hunch is probably too that if we did a fib off of this entire range, that's probably 38.2s. What do you think? I think the odds are probably pretty good. Yep, there's 38.2. So I'm thinking a little bit lower here over the short term, but I'm not really don't have a trade set up. This is going to take some more time to set up. So, okay, I think I'm going to leave it at that. I've been chatting for a couple hours now. Sorry, dude. I don't know what it is you. If this is a new thing you want me to look at, I think I'll leave it at that. This is. Whoa, there you go. Perfect. In fact, we were even showing this in the level 1 class because some people were like, holy fibs, man, that's incredible stuff. Wow. So, well timed. All right, why don't we leave it at that? I'm going to leave off the song, and since this is our song, YouTube, you should not kill us for this, but let's go out with a big mariachi. Here's a good Bitcoin chart. We'll leave it on this. All right. Have a great week, everybody. We'll see you next weekend. All the best and bye for now.